Hey everyone, and welcome to This Explainer. Today, we're going to dive straight into a highly approachable strategy for protecting your wealth from utter market chaos. We're drawing on some absolutely fantastic source material to unpack the core logic of an asset class that honestly flies right under the radar for a lot of everyday investors. We're going to explore how you can build a literal financial fortress around your hard-earned money, not by chasing the latest viral stock trend, but by investing in the very foundations of modern society.
Okay, let's just jump right into it by acknowledging a major pain point we all share. It's totally exhausting, isn't it? That tense, deeply stressful feeling of watching stock tickers flash red and green, worrying about inflation, and seeing crazy market volatility threaten to just eat away at your savings. One day the market is soaring on pure optimism, and literally the next day it's plummeting because of some unpredictable geopolitical news. It makes investing feel like this relentless roller coaster that you're strapped into, but you desperately want to get off.
Finding a market safe haven. So, to find that much-needed safe haven, we have to gracefully shift our focus away from those stressful flashing screens to something entirely different. A calm, reliable refuge that's actually hiding right in plain sight. We are talking about infrastructure investing. It's a beautifully straightforward category. You're investing in the physical frameworks that literally keep human civilization functioning. And the ultimate benefit of this asset class? Its unique risk-resistant properties, specifically highly visible and incredibly stable cash flows. In the wild, unpredictable world of finance, visibility is a massive luxury. It means knowing, with a very high degree of certainty, exactly how much money is going to come through the door, not just next month, but next year.
To make this super concrete, let's think about what we actually mean by essential facilities. We're talking about the completely mundane, everyday things you rely on without a second thought. Think about your smartphone right now. It relies on telecommunication towers. Think about your daily commute. You might be driving on toll roads. Add to that the absolute bare necessities of human survival and modern comfort, like your water and power supply, and increasingly our renewable energy grids. These completely ordinary operations secretly act as the most powerful defensive assets in finance.
The secret of stable cash flow.
So you might be wondering, how do these boring physical structures generate such unparalleled stability? Well, the crucial point is our first pillar of stability. It's all about rigid demand. Think about it. If there's a devastating recession, yeah, you might delay buying a massive new television or maybe skip that international vacation. But are you going to stop using water? Are you going to turn off your home's electricity? Are you going to stop using your cell phone to text your friends? Absolutely not. Plus, these facilities basically operate as regional natural monopolies. The risk of people finding substitutes for these essentials in their specific geographic area is extremely low. I mean, there simply isn't room or regulatory approval for that matter to just build a competing toll road right next to an existing one. And that brings us to our second pillar, the sheer mathematical length of the contracts involved. 10 to 20 years. That is the number of years operators typically sign long-term lease contracts for. Take those telecom towers, for example. The owners of those towers lease space to major telecom giants. Those giants really don't want the massive headache of moving their delicate, insanely expensive equipment every single year, so they lock in 10 to 20-year leases. Imagine knowing exactly who your tenant is and exactly what they're going to pay you for the next 2 decades. That is a level of predictability that traditional businesses can literally only dream of. It's a very similar story when we look at how toll roads secure their income. They don't just rely on corporate contracts. They operate on long-term concessions granted directly by the government. A government essentially grants a private company the right to operate and collect tolls on a specific road for decades. This legally locks in concrete stability for years on end, backed by agreements with the state itself. It basically guarantees that as long as cars are driving, the cash is flowing.
The natural inflation shield.
Okay, here is where this asset class turns into a total superpower. We need to talk about inflation. The silent thief that just eats away at the purchasing power of your cash sitting in the bank? Standard companies totally panic when the Consumer Price Index, or CPI, rises, right? Because their input costs go up and their profit margins get completely squeezed. But infrastructure contracts like those for toll roads are often explicitly and legally designed to adjust upwards perfectly in sync with the CPI. When the cost of living goes up, the toll rate automatically goes up with it. In other words, in the world of infrastructure investing, inflation actually becomes a helpful ally. Because of this synchronous growth as prices rise in the broader economy, your asset revenue and cash flow grow right alongside them. It acts as a natural built-in shield to protect your real purchasing power. You aren't losing ground to inflation. Your investments are literally structurally wired to keep pace with it.
The anchor of asset allocation.
Now, let's zoom out and look at how this core logic fits into your broader financial picture. It's super important to set the right expectations here. Investing in telecom towers and toll roads isn't some heart-pounding scheme for explosive, multiple-fold growth. If you want to double your money overnight, this is for sure not the place. Rather, it's a calm, reassuring engine for low volatility and continuous dividends. It's designed to steadily perform and pay out throughout all business cycles, whether the broader stock market is trapped in a euphoric boom or a terrifying bust.
Because they're the defensive cornerstone of social development, these assets serve a very specific, absolutely vital purpose in your financial life. Our source text refers to this beautifully as the anchor of your portfolio, a stabilizing force that calms stormy seas. While your high-growth tech stocks might be the sails catching the wind, infrastructure investments are the heavy, indispensable anchor that ensures your ship doesn't capsize when the economic storms inevitably roll in.
So, as we wrap up this explainer, I want to leave you with a final thought to really chew on. Take a hard look at your own financial defenses. In a world of constant, churning economic uncertainty, have you actually established a risk-resistant foundation? Consider how the steady, predictable, and inflation-shielded power of infrastructure investing might just be the exact anchor your portfolio needs to weather absolutely any storm.